Hi, and welcome to Hedge Fund Manager. I'm Karl-Mikael Siding. Today we're doing a deep dive of Meta, and we have come to the technical analysis part. And I'm going to show you the trends for 3 of the Magnificent 7 companies. Possibly not Mag 7, but Bag 7 if things go south or they turn out to be too expensive or have 2 negative trends. So we'll start with Alphabet, Google, and as we can see here, this dotted gray line here is the 200-day moving average, which I think is the most important technical analysis key indicator and possibly the only one you would ever use. And even when you use it, you should use it sparingly. It is not a decisive factor for investing in a company, but it could be a timing tool. It could make sure you don't do anything you didn't want to do or take any rash decisions if it actually has a negative signal. So what you can see here is that a month or so ago, the Alphabet's share price moved below its 200-day moving average for the first time in a pretty long time. And it has stayed below 200. It actually tried getting up above again, but failed. Then we had this pretty strong down day and a bounce, kind of a double bounce, but we're still not even close to the 200-day, I would say. So this really is starting to look like a negative trend, a longer bear trend starting. So this is definitely a technical headwind. However, if Google were to prove cheap enough, it might still be interesting to at least start buying the stock, but we'll see about that. Today, however, the deep dive is about Meta. And moving on to Meta's technical trends, we can see just as with Google, we have a long period here of Meta's share price being above and pretty typically far above its 200-day moving average. It has been a period of very positive sentiment around Meta. However, after this intense peak at about 740, the stock moved down all the way to its 200-day, tried bouncing but couldn't hold on, and then has moved below 200-day, and it actually tried getting up above, but that it failed again here and moved down. That is a pretty negative technical signal. If I were a pure technical analyst, I would say this is a good time to sell the company. We're once again trying to move upward, but it's not really convincing. So I would, there is no way of knowing these things, and actually this could also be a double bottom now if once we're in the technical analysis part of the equation. But if we were to fail against the 200-day again, and the 200 moving average is starting actually to itself turn downward, then this is almost as negative a technical signal as they get. So this is definitely a headwind in terms of technicals. And then let's briefly look at Nvidia. It looks just about the same, and regarding how far below and how meek the attempts to recapture the 200-day moving average, this looks even more negative from a technical perspective than even Meta and Alphabet. So that's the technical analysis for the single stocks. They are all facing technical headwinds. Let's also take a look at the market technicals, because that could also be an indication of where we are. And I've included 5 years for the Nasdaq. And as we can see, they had a really strong run, staying above the 200-day average for a couple of years here around COVID, except for the crash, the actual COVID crash, which actually lasted for almost exactly just 1 month from peak to bottom, and then immediately recaptured the 200-day and never looked back. And then in 2022, the inflation scare, we got below the 200-day, tried going above a couple of times, but failed. And then after that, you can see as soon as we got above the 200-day, the Nasdaq has had a really stable growth period, and now we're below again. So is this just a temporary blip below, like as in 2020, or are we actually seeing the start of a longer-term bear market? If we consider the valuation of the Nasdaq, it is definitely a good time to start a bear. The 200-day is usually a pretty good indicator of a negative trend once you turn below it, and the 200-day itself, as you can see here, is turning downward. And what saved the market in 2020 was quantitative easing, so money printing in effect from the Fed, including really large deficits from the federal government. So immense stimulus was needed to create this bounce, and we're actually still living with the after effects of that. And so I would wager that even with a really erratic president like Trump in the leadership, he would not want to press on with huge stimulus or money printing unless it's really needed. So I would guess we are actually starting a bear market here, at least from a technical perspective. It seems that way, and in order to turn things around, I think we would need pretty heavy stimulus measures or some external positive factor, and it doesn't really look that way. So we have a negative technical analysis for all three companies and a market headwind. So I don't think it's probable that these headwinds will abate anytime soon. So we have a negative technical picture, and for the next video we'll move on to the actual valuation using the P equals F times V model as always.